Hello and welcome back to Principles of Accounting 2. I am still your host, Dr. B. I sincerely appreciate all of you taking the time out of your day to join me today to talk about a very important concept called job order costing. We are in the third week of our semester together here at UDC in spring 2023 semester. This is a 16-week course, and week 3 already. Can you believe it? Oh my goodness gracious. So job order costing, real interesting concept we're going to talk about. And I want to kind of refresh your memories about what we talked about last week when we talked about managerial accounting. One of the things that I had mentioned is that it's really important for you to kind of get into that mindset of a manufacturer. Because we talk a lot about different types of cost. And job order costing is no different. So I want you to think about a manufacturer. I want you to think about the kinds of things that they make, okay, and how they go about doing it. Remember last week we talked about following the physical flow of the products as they move down the assembly line, starting as raw materials, going into work in process, coming down the assembly line. They're being made by people, direct labor. They're being made with materials, direct materials. There's some factory overhead involved. We keep adding it onto the product, and then it becomes a finished product. It's available for sale. So think of that assembly line as the car is moving down it. First we're building the frame, then we're putting the doors on, then we're putting the engine in, then the glass, and then the rubber, and all of the components. And it becomes a car. Then we paint it and polish it and send it off the assembly line. Yep. That's how we make a car. So keep those things in mind as we talk about job order costing. So for those of you who are following along at home, we are here in the classroom, Module 1, Week 3. We have our PowerPoint, which is what we're about to go through. Exercises are there for you to practice. Remember, those are just practice. And then Chapter 19 homework. 5 questions, true, false, multiple choice, 2 attempts, highest scores taken in the grade book. And that's where we are. So let's talk about job order costing. So I want you to think about that assembly process that we just described. And I want you to think about how customers place orders. That's what a job order is. It's a customer order. They ordered the car to be made from the manufacturer. That's what a job order is. I want you to think about that. So, job order costing. We use this in production of large, unique, or high-cost items, like a car. Okay? These are built to order rather than being mass-produced. Built to order instead of being mass-produced. And there are many costs that can be directly traced to each job. I want you to think about that second bullet there. Built to order rather than being mass-produced. Here's a couple of examples. We talked about this last week, but I'm going to use the same examples just to keep things easy. Toyota uses what's called just-in-time manufacturing process. And the way that they build their cars are based off of the customer's order. The customer goes on to Toyota's website and they build their car virtually, right? Oh, I want these tires, I want this color, I want this engine. You're building a car on the website. And then you get to the, after you've built the car, it'll say go to the dealership or, click to purchase or put the purchase order. Place the order. And then what happens is the manufacturing facility, Toyota, receives your order and says, oh, okay, Dr. B wants the Toyota Tacoma. He wants it in Army Green. He wants the lift kit on it. He wants the big tires. He wants the police bumper, all the fun stuff, right? Okay, so Toyota says, okay, great. Let's build Dr. B the truck. That's a job order. The job is building the truck, and it's based on the customer's order. That's why we call it job order. Job order costing. That's what we're going to talk about today. Next week, we're going to talk about what we call process costing. Process costing is continuous. Process. Think of like bottled water. You know how many millions and millions of these things there are? Thousands of them get made every second. It's a process. They're the same. It's a bottle. It's got water in it. It's got a label on it. There's millions of them, so mass-produced. And it's a continuous process. They're going to keep making thousands of these every second from whenever it started till the end of time. Continuous, mass-produced, the same exact thing. That's called process. That's process costing. Job order costing, which we're talking about today, is based off of specific, unique, low volume, specialized products. So it's the other way to think of the difference is Toyota uses job order costing. Ford, Chevy use process costing. They make a lot of the same exact car. A lot of them. They mass produce them. That's process costing. Today we're talking about job order costing, specific to the customer's order. So again, the difference between the two, job order costing, specific customized orders, heterogeneous products and services, meaning that there's a variety of them. Low production volume, we only make a few trucks rather than hundreds of thousands and shipping them off to the dealers. High product flexibility, you can customize anything on this order. You could have heated seats, you could have the leather wrapped steering wheel, leather seats, different color interior, different color paint, all kinds of customization. So flexibility. And low standardization. What we mean by that is we can change the standards based off of the specifications from the customer. That's job order costing, job order operations. The opposite is process costing or process operations. That's chapter 20. In chapter 20, next week, we're going to talk about repetitive processes, like making the same product over and over and over again. Homogeneous products and services. A water bottle facility creates the water bottles, fills it with water, puts a label on it, and then a cap. It's just one product. It's a bottle of water. It's the same product. It's no difference. Homogeneous products and services. High production volume, thousands of water bottles a second. Yeah, think about that. That's high volume. Low product flexibility. Just because a customer wants a smaller cap doesn't mean I'm going to give it to them. They want a clear cap instead of a blue cap. Low product flexibility. And high standardization. Same water source, same type of water, went through the same filtration process. It's very standardized. That's the difference between the two. So again, today we're going to talk about job order costing. Next week we'll talk about process order costing. So when we talk about job order costing, I want you to think about each customer order representing an individual job that we have to do. Okay. In the car manufacturing example that we talked about, each car that we build is a specific job. It goes through a process of manufacturing. I want you to think about the physical flow of manufacturing. Everything starts as raw materials. It gets pulled into work in process when I start to build the car on the assembly line. In work in process, there's individual stages or departments that the car goes through. It starts in fabrication. I'm building the frame of the car. The next department might be doors, hood, and components. Okay? Putting additional things in the car. The third department might be the tires and whatever else. The last department is painting, polishing, and then push it off the assembly line and it becomes a finished good. It's complete. It's done. And then a few days later, it goes onto a delivery truck and off to the customer it goes, or to the dealership. That's the physical flow. In manufacturing, we know that in order to build anything, create anything, we have direct materials, direct labor, and factory overhead. The factory overhead comes from related costs like indirect labor, indirect materials, and a little bit of other costs that we cannot directly trace to the process, right? These are the costs that go into manufacturing a product. All of those costs get added in at each of the individual departments on the assembly line at their various stages as it's in work in process. Yeah? It's all about the physical flow. So understanding that is very important. Everything starts out as raw materials. Direct and indirect. Direct materials means it makes up the majority of the cost of manufacturing the product. In the car example, direct materials would include things like steel, aluminum, metal components. Those are direct materials. They make up the majority of the cost of the car. Indirect materials, these are the real small things. Glue, indirect material. We don't use much glue. Small components. Fabric for the seats. It's a small cost. Things like that. indirect materials are like the real small things. They don't equal a whole lot of the total cost of the product. Indirect. That's raw materials. We take the raw materials, we put it in the work in process. That's us putting together the product, yeah, work in process. I'm adding in, at this stage, I'm adding in direct materials, direct labor, and factory overhead. I do that a little bit at each department as it's moving down the assembly line. And then at the end of the assembly line, the car rolls off and it becomes what we call a finished good. That means it's complete. Done building the car. Now it's available for sale. When I sell the car, it becomes what we call a cost of goods sold. This is the cost that it cost me to sell that car. It's the cost of manufacturing, materials, direct labor, factory overhead. It's the total cost of the car. That's what it costs me to sell it. Cost of goods sold. Yep. All of these different kinds of costs are recorded for each individual job. Job number 415 for Dr. B's green Toyota Tacoma. My job order, it has all of the materials it took to build the truck, the total amount of hours each employee worked on building that truck times their hourly rate. That's direct labor. And plus the factory overhead rate. All of those things are on my job order cost sheet. That's what we're going to talk about next. The job order cost sheet is exactly as I had said. It tracks all of the materials, direct labor, and the factory overhead applied to building my truck from Toyota. It is a sheet that tracks the cost of these three things all the way from just being raw materials to the end, to the finished good. Yeah. Job order cost sheet has things like customer's information, the job order number, the date that we promised it, the date we started it, and the date we completed it. It tracks all of the individual materials we used, all the direct labor we used, and the factory overhead. You'll see a couple of things related. Everything has a date. The date represents when we used something. For example, direct materials. This is the date that I took on 3/3/2019. I took metal or steel from my direct materials using a requisition number, requisition form. And I have the amount of steel that I took and what cost per amount of steel. 3/7, I took some aluminum. Requisition number, much aluminum times the cost. That's the requisition form for the aluminum. So forth and so on. I add up all of the total cost of the materials I used to build the truck, get my total direct materials. For direct labor, we use this thing called time tickets. Time tickets, you know what that is? When you go to work, you punch in and you punch out. Then you punch back in, then you punch back out, right? So we all did this at some point. That's called a time ticket. It's your time card. Yep. Shows when you punched in for work and when you punched out for break, when you punch back in and when you punch back out. In manufacturing, Use the time tickets to track how much time you spent working on a particular job. So if you're working an 8-hour shift at a Toyota factory, you might be working on 20 different cars. That's 20 different jobs. I need to track the exact amount of time you spent working on each individual car. I track that to that car, that job, you see, using a time ticket. You started working on the job at this time, you ended working on the job at this time. I take your hourly rate times the amount of time spent to equal the cost of each individual time ticket. I add up all of the time tickets, time spent on the car, give me a total direct labor amount. Make sense? Any questions so far? We're doing okay. Right. Then we have, thank you, Maria. For the overhead, we have what's called the overhead rate. Now, the overhead rate, as we briefly talked about last week, is computed by whatever the business specifies. Here's what I mean by this. For this particular company, they said that their total factory overhead rate is calculated by taking 160% of the total direct labor cost. That's how I find the overhead rate per job. Yep. So we take whatever the total direct labor is, and we multiply that by 160%. So I take $1,000 in this example times 1.60. 1,000 times 1.6 is $1,600. That's my overhead rate. So at the bottom of my job order cost sheet, I add my total materials, total labor, plus total overhead to give me the total cost of the job. This example, $3,200. That's the job order cost sheet. As I had mentioned, the cost of the materials follows the physical flow. Okay, we follow the physical flow. For materials and labor, for the direct materials, it works like this. Company purchases the raw materials from their suppliers. Okay? We get the raw steel from the steel company. We get the aluminum from the aluminum company, and the car components from a lot of other small distributors, right? We purchase those. The Toyota's not making their own steel, okay? We're buying it from somewhere. We don't make our own aluminum, we buy it from somewhere. We don't make our own components, we buy those from somewhere. What our company does is we build the car, but we buy all the stuff to build the car from elsewhere. Yep. When I buy those materials, I receive it from my distributors, I have what's called a receiving report. The receiving report shows me how much I purchased, quantity that I purchased times the cost that I purchased it at, giving me the total purchase amount. And that receiving report correlates with every single thing that I bought. This receiving report says I purchased $1 million worth of steel. This receiving report says I purchased $500,000 of aluminum. This receiving report says I purchased $300,000 in components and wiring and et cetera, et cetera, et cetera. Those receiving reports get recorded in what we call the materials ledger card. Material ledger card represents the amount of material that I received, the amount of materials that went into work in process, and the remaining balance. It basically shows a balance of the amount of materials that we have on hand sitting in raw materials. All these material ledger cards. As we use the materials, the employees fill out what's called a requisition form, requesting a certain amount of raw materials from the raw materials department through a requisition form. That requisition form is recorded on the job order cost sheet under the materials, under the direct materials amount. Indirect materials get recorded, of course, in factory overhead. Indirect, remember? But that's the physical flow, and it follows the cost. For labor, the direct labor gets recorded directly on the job order cost sheet based on the amount of time the employee worked on the job times their hourly rate. And I'm going to show you what that looks like here in a second. So here's an example of a materials ledger card. We can see the materials that came in under the received category. These are purchases that we made from our suppliers. We received these particular units in. We issued them to work in process a few days later, certain amount. And then on the far right, we see a running balance. This is an example of a materials ledger card. The materials requisition, this is what the employee fills out that's on the assembly line. They need to request raw materials in order to be used for a customer job. So they fill out exactly what they need, how much they need, who did it, etc., and the dates. That information from the requisition card gets entered into the job as direct materials. Now, we need to transfer inventory from raw materials to work in process. So how do we do that? Because obviously we can't do that through a requisition form. It doesn't work that way. The way we do it is we total up all of the individual jobs that requested raw materials. We get the total raw materials amount, in this example, $1,800, and we make a journal entry. We call this an adjusting journal entry. You remember this from Principles of Accounting 1, I hope. We debit work in process inventory, and we credit raw materials inventory. What this shows is the use of direct materials. That's materials. Labor. I want to show you labor. Earlier I talked about time tickets. The employee punches in and out, in and out. And for each job, we record the actual amount of time spent working on each individual job. This is called direct labor. So we take the time ticket, that's the amount of time spent working on each job, times the amount per hour that the employee works, or gets paid. Yep. That's what goes under direct labor. Indirect labor, these are like your supervisor's salaries, etc. That goes into factory overhead. Yeah. Here's an example of that kind of time ticket I was talking about. This particular employee worked on a single job, B15, for 3 hours. Started at 9, ended at 12. His hourly rate is $20 per hour. So 20 times 3 is $60. And that's just for this one employee on this one job. Now remember, there's usually more than one employee on a single job. And they usually work on multiple jobs. So we add them all up. So we see that each job has the direct labor amounts. We add up all of the direct labor amounts for each job to get total direct labor for this particular time period, this accounting period. And then we make an adjusting entry. We debit work in process inventory to add in the direct labor. We credit factory wages payable because eventually we've got to pay our employees. This shows the use of direct labor for the month. And for overhead, I had mentioned that this is set by the company. And it's usually based on some type of activity. In the example we talked about earlier, I said it was 160% of the total direct labor. The direct labor is the activity, right? So we call that a predetermined overhead rate. Predetermined overhead rate is set by taking estimated overhead costs. It's usually something like total factory overhead divided by the estimated activity base. In this case, we'll say it's direct labor, activity base. So direct labor, we're going to say is 1,000 hours or whatever. So total overhead cost divided by the 1,000 hours, that gives me the predetermined overhead rate of 1.6. And we're going to say that's 160%. Then we take that predetermined overhead rate and we apply it to the job. And to do that, we take 160% overhead rate times the actual amount of the activity base. In this case, it would be the actual time worked on that job. So 160% times the time worked on the job, or the amount of the job, $1,000, right, of overhead from the example. $1,000 of direct labor from our earlier example times the 160% gives us a total applied overhead of $1,600. Now, at the end of the accounting period, that overhead might be over or under. We call that over applied or under applied, in which case we make an adjusting journal entry if it's over or under applied. Because the idea is we need to match it back up. We'll talk more about that here in a little bit. First, what is predetermined overhead rate? It's based on something like direct labor cost that we apply to apply to the overhead to jobs. We find this by taking estimated overhead cost divided by the activity base. This example, I'm sorry. And then, of course, we make the adjusting entry to apply factory overhead. We debit work in process to increase the cost of work in process. And we credit factory overhead. This is how we apply the factory overhead amount. Earlier example we're talking about, that's job B15, just so if you're following along. And then, of course, there's actual work overhead, which includes things like indirect materials, indirect labor, other things like utilities, rent, etc. We record that indirect labor used, we debit factory overhead, increase factory overhead, and we credit raw materials inventory. This shows the use of indirect materials. To record indirect labor that we used, we debit factory overhead to increase overhead, and we credit factory wages payable to show the indirect labor that we used for the month. Indirect labor, as a reminder, it would include things like cleaning staff, the office staff, supervisor salaries, etc. Those are the support people. Yeah. And then we record any other overhead costs. So we debit factory overhead and we credit things like accumulated depreciation, rent, utilities, prepaid insurance, etc. Anything else? This slide kind of just shows you the flow of the physical costs from raw materials to work in process to finished goods. We can see for raw materials, we got the raw materials used, direct materials used, goes into work in process. We add in direct labor and factory overhead. And what comes out of work in process becomes cost of goods manufactured. And then eventually it becomes cost of goods sold once we've sold the finished good. That comes off your balance sheet onto your income statement. And then we add in any selling and administrative expenses. This is a nice graphical representation of that physical flow. So number one has the materials purchased. Those are materials that we purchase from our vendors, like our steel, aluminum, components, etc. Two shows the materials used or requisitioned. Flows into the work in process inventory. The work in process inventory shows and then we add in our materials and overhead, etc. We do this for each job. And then it flows forward. Yep. It's just a nice flow chart, if you will. And this shows us a summary of all of the adjusting journal entries that we need to make in order to show that physical flow of the amounts used out of raw materials into work in process, out of work in process into finished goods, and of course the accruals for the factory overheads, etc. This slide shows us the schedule of the cost of goods manufactured. This is an important one to understand because here we can see the difference between the factory overhead applied and underapplied. What I mean by that is, in some cases, because we're using an estimate for factory overhead, for example, 160% of direct labor, because that's an estimate, it's probably not going to be 100% accurate. There might be a small difference. And when there's a small difference, that means we either over-applied overhead or under-applied overhead, in which case we need to make an adjusting entry, which we're going to talk about next. In order to figure out that difference, we look at what's called the schedule of the cost of goods manufactured. This shows us direct materials plus direct labor plus factory overhead applied to equal the total manufacturing costs. Of course, anything that's added into work in process equals the cost of the work in process minus the ending balance work in process gives us the cost of goods manufactured. So again, why was cost of goods manufactured important? Because it needs to show us whether we've over-applied or under-applied factory overhead. If the actual amount of factory overhead is greater than the applied amount, then we call this under-applied overhead, in which case we need to make an adjusting entry where we debit the cost of goods sold and credit factory overhead. This increases the factory overhead to its actual amount. If the actual overhead costs are less than the applied factory overhead, we call this over-applied, in which case we need to debit factory overhead, reduce factory overhead, and credit cost of goods sold to reduce cost of goods sold. Those are the adjusting entries that we would make at the end of the accounting period for either case. So how do we determine those amounts? How do we determine the amounts? Well, of course, it's based off of the difference between the actual overhead cost versus the applied overhead cost. And then we will make the adjusting journal entries accordingly. We can apply the same type of job order costing to service businesses as well. This individual customer service we will record as a job. Of course, the only difference here is going to be with respect to inventory. We don't have raw materials inventory. We do technically have work in process. We call it service in process. It becomes a cost of the service. Yeah. And the overhead is actually labor, the direct labor, indirect labor, and any type of other overhead like rent, etc. We can also apply job order costing to service businesses, but we'd also apply them to things like retailers as well. There's a couple of different ways to go about it, but this is an example of an advertising business showing us how we would apply job order costing to an advertising business. Of course, the primary difference here is going to be materials. There's no materials really in a service kind of business, but we do have direct labor and factory overhead. That is, believe it or not, the end of our discussion on job order costing. Are there any questions that you have about job order costing that maybe we didn't touch on? Or anything that you want me to go back and explain that maybe I didn't do as good of a job on, or anything along those lines? I do okay? Does it make sense? Are you awake? Yeah, okay. All right. Good. Yeah, it's pretty straightforward overall. Again, I just want, when you think about job order costing, I really want you to think about each individual customer order is its own job. Right? And that each job has individual cost for materials, labor, and overhead. We add those things together to get the total cost of the job. Okay. And that's really the best way to think about it. Next week, we'll talk about process order costing, which is continuous manufacturing process. And next week, I want you to think about something like an ice cream manufacturer or water bottle company, or someone like Coca-Cola that does the same products. Those are process companies. Tyson's Chicken, that's a process company. They make a lot of the same stuff that we see in grocery stores. That's for next week. For this week, I want you to think about someone like an auto manufacturer like Toyota that does specialized orders. And that's really the best way to approach these types of costs and understanding them, is to kind of conceptualize them and apply them to something that you might see in your daily life. Okay, if for whatever reason you ever need help with anything, I want you to remember that you can always email me, call me, set up office hours, whatever you need. Even if it's just a quick question about a question on your homework assignment. Let's say it's a question on job order costing that you just don't get. Let's take a look at the homework assignment real quick. Let's say here we are in Module 1, Week 3, and you're taking the assignment. All right, you're working on your first attempt. Because remember, you got 2 attempts, yeah? You're working on the first one, and you come down to a question. Here, for example, question 2. This is kind of a complex question when you first look at it. Here we go. It says work in process inventory account for this manufacturers as follows. The question says compute the cost of jobs completed and transferred to finished goods. Okay, so Matt, what I'm looking for here is what is your finished goods? How much is in finished goods? And we know the formula for this, right? There's a formula for this. So if we take the formula and we apply it here, we can figure out how much was transferred. So if I go back to my slideshow presentation, or to my notes that you probably recorded, or to whatever, if it's finished goods, that means it's cost of goods manufactured, because we're taking work in process into consideration. So I'm looking for direct materials used plus direct labor used plus factory overhead to find total manufacturing costs, plus beginning balance work in process equals total work in process minus ending balance work in process equals the total cost of goods manufactured. This is probably the slide I would use to answer that question. Yep, because it follows the formula. But if you see questions like this and you just don't know, feel free to shoot me a quick email. You can set up office hours. Set up office hours is real easy. You just come up here into the classroom, select that office hours link, 30-minute session, and then select a day, like tomorrow, and then a time. Whatever's easy. And if that doesn't work for you, if you don't have time to meet or whatever, just shoot me an email. We'll set up a different day and time. I'm here for you, is what I'm saying. So if you can email me, call me, set up office hours, and I'll be quick to respond. I'm real quick with email. A lot of you know that already, but if you send me a quick email, I'm quick to respond. So even if it's like a Dr. B, I don't understand question 2 of the homework, please help me, I'm going to respond to you. And it's going to be, here's the formula you should use, here's where you can find it in the book, here's where you can find it in the slides, and this is what we talked about in class, that kind of thing. But I just want to let you know that I'm here for you. Whatever you need, got me. So with that, I want you all to remember to stay safe, wash your hands, do the right things. I'll see you all again next time. And if you need anything in between now and then, I'm here for you. Thank you so much. Take care, y'all.
Have a good night.
You too.
Thank you, Professor.
Take care. Appreciate you.
Too.
Bye-bye.
Thank you.
Thank you. Take care. Bye-bye.